So I honestly, I think the ETFs have been a smash hit, like much more activity than we expected. And the main, like I said, to sum it up, the main cohort we think is the net new user of this ETF is not even in the game yet.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Alex Thorn, who's the head of firm-wide research at Galaxy. Alex, it's great to have you on.
Yeah, Tony, great to be here.
Alex, I've of course followed Galaxy for a long time. Mike Novogratz as well. I think Mike is well known. And I've always been curious as to what Galaxy is doing behind the scenes. So I'm very excited to talk to you about what you guys are seeing in the market, what you're investing in, and much more. But let's start with your background. Where are you from and where'd you grow up?
I'm from northern Massachusetts. I grew up there. I went to high school there. I went to college at Vanderbilt University in Nashville, Tennessee. Worked at Fidelity Investments for 12 years before joining Galaxy in 2021. In reverse order, at Fidelity, I co-ran Avon Ventures, which is Fidelity's affiliated crypto venture capital arm, which we started. And it was director of blockchain research at Fidelity before that, and then had a whole prior career of legal and compliance roles before that. But yeah, and been at Galaxy now for over 3 years. It's been a pretty fun ride.
What was your first encounter with Bitcoin and what was your aha moment?
So in one of my early roles, sort of at the relative top of one of my first careers at Fidelity, effectively, I was basically a senior forensic investigator at Fidelity Legal, which involves a lot of database management and evidence collection, but we're talking about computer evidence, but also occasionally like decryption, right? Finding stuff people don't want you to find. I was a hobbyist in I'm not a computer scientist by trade. I mean, I studied political science, but I was a hacker by hobby, meaning that I learn on computers by breaking things, basically, and so I was really interested in network penetration and encryption technologies. I was running a Tor exit node in like 2009. Wow. And at some point I was in some IRC chats about like the hacker collective Anonymous or running Tor exit nodes and stuff. And in like 2012 or so, and people were like, have you seen this Bitcoin thing? And I was like, I have no idea what that is. And then I was like, wow, this is pretty cool. It's digital money. It's encryption money. It's kind of how I thought of it. And then there were activists in the Euromaidan protest in Ukraine. I mean, things really come full circle. They were soliciting donations in Bitcoin. I was like, what is this thing? And so I got interested in it, then kind of stopped caring. And then in 2015, really Fidelity started getting interested in it, and I was sort of identified as one of the people who knew about it. And so I started working with them, and then I was like, I have to really go down the rabbit hole. Really became a true believer probably in like 2015 or so. I've later learned that my now friend Alex Gladstein, the chief strategy officer at the Human Rights Foundation, is the one who was helping Euromaidan protesters use Bitcoin. Wow. Which is one of the first ways I learned about it. So it's been a while, but I've been working on it full time probably since like 16, 17 in one capacity or another.
That's amazing. Now let's talk a little bit about Fidelity, because what fascinates me is that Fidelity is very early out of all the big institutions in Wall Street, and I give them a lot of credit for that they were thinking outside the box. They were ahead of the curve. Now everybody's here and the ETFs and all these things are live. But What do you think? Is it just their DNA, as opposed to, let's say, a Vanguard, which is like, we don't want to list any Bitcoin ETFs, but Fidelity's like, let's explore this. Let's take a look at this.
Yeah, it is. And I would say it's in the DNA of Fidelity leadership and ownership. So I chuckle because they are commonly thought of as a Wall Street firm. They would take umbrage at that. They're not on Wall Street at all. They're on Summer Street in Boston. This is a Boston headquartered company, not a New York headquartered company. And that actually goes back to it. Like if you think about the two cities, like Boston has this really like sort of more old school pilgrim sort of New England. I mean, New Englanders are different than New Yorkers, and they have a more sort of buttoned up kind of polite, not that anyone's impolite, but sort of a more polite New Englander vibe. And that does pervade, I would say, at Fidelity. It's not a Wall Street culture there in the scheme of things. And by the way, they're mostly an asset manager and brokerage firm, right? So they don't create like bespoke they're not an investment bank. They're not a bank at all, right? So there's some distinction. But Fidelity also, another thing people don't know is that it's a privately owned company. It is not a publicly traded company. It is owned majority by current chairman and CEO Abigail Johnson, who is the granddaughter of the founder, Edward Johnson, right? And his son, Ned, her dad ran the company for 30 plus years. And he was, among other many things, famous for technology innovation. I forget all of the laudatory benchmarks here, but like Fidelity was the first company to have check writing on a brokerage account. They were the first asset manager and brokerage firm to have a website. And they were the first ones to like have a 1-800 number, et cetera, right? And they devote a significant portion of annual spend into technology innovation. When I was director of blockchain research there, that was specifically in a centralized innovation department called the Fidelity Center for Applied Technology, which I used to joke was Ned Johnson's bat cave. Like it's literally the other teams in there when I was working on it in 17 and 18 there were like AI, machine learning, like VR, right? Like that's what people were working on in that group, and blockchain. And so so the story goes, Abby, the granddaughter of the founder of Fidelity and the current CEO and chairman of the board, and I think, as far as I'm aware, the majority owner of the company. Like I said, it's a family-owned company still. She became specifically interested in Bitcoin herself, right? And so unlike many places where, particularly in traditional finance or in big companies where Bitcoin was pitched up by a junior employee or a middle-level employee saying, oh my God, like you gotta check this thing out. And it's like hard to twist the arms of the higher ups or the older folks there to get them to do it. This was actually the exact opposite. This came down from Abby, and some people were assigned to look into it. And some of those people found me as a resource when I was in the legal group at Fidelity. Right. And so like this is a whole different way. And that, I mean, frankly, that's why they're so far ahead. And then when I was working on it there, we were looking at all different types of use cases for blockchain, literally like the most vanilla private blockchain ideas as well. Like, can we use this to share like trade reporting with FINRA, the securities self-regulatory organization? Can we do like a private blockchain with the other brokerage firms to like do like KYC with thing or something? Who knows, right? Like all that we did enterprise use cases that were relevant for our business, not like, we weren't trying to put tomatoes on the blockchain like sure. IBM and some others, because that has totally irrelevant to Fidelity's business. But we looked at so many of these, and I won't do the whole rant on why, but ultimately we were like, no, really the market need is Bitcoin institutional custody. And of course we liked Bitcoin a lot. I mean, it wasn't like we went only into enterprise blockchain, but that was one of the sort of paths we went down, was like, can we use it for anything else? And we were like, maybe one day, but actually the real opportunity is in Bitcoin. And so that's why the efforts were put forth to build what is now Fidelity Digital Assets, which was really a Bitcoin custody product that was built initially in the blockchain incubator inside Fidelity Center for Applied Technology. So, and obviously they've come a long way since then. So it is, as a long answer to your question, Tony, it is in their DNA, but it's not just the company culture. That culture pervades down from the top. And the fact that it's private means they have a lot more leeway to do things like spend a ton of money on innovation, right? And like get these almost like a SpaceX. Like SpaceX, people are like, oh my God, they blew up so many rockets. Well, it's like, yeah, they're a private company. They weren't afraid to blow up all those rockets. That's why they're up in space first. Yeah. Same thing.
Yeah, no, that's great insight, man. And to your point, coming from the top down from Abigail, that's amazing and just shows the mindset and that they are forward thinkers. That's pretty awesome.
Yeah.
Um, Now, tell us about Galaxy. For those who don't know about Galaxy, tell us about Galaxy and the services and all the different things you guys do.
Yeah, so Galaxy is, I'd venture to say, one of the biggest multi-service financial companies in all of crypto. A lot has changed over the last few years, but recalling, and I don't just mean at Galaxy, I mean in the market and the market infrastructure. But given some of what has gone on over the last 2 years or so, I would venture to guess that now we're probably the biggest in OTC spot and derivatives trading. We're one of the biggest asset managers in all of crypto. I think second behind Grayscale in AUM.
Wow.
So we have an asset management business that manages private funds, active strategies like venture and hedge fund type strategies, literally that take and manage money for external clients. Also passive vehicles. Obviously, we're a sub-advisor to the Invesco Galaxy Bitcoin ETF. So, and we are similarly have ETFs like that in both Canada and Brazil. And that business has also announced a big partnership with DWS, which is Deutsche Wealth Services in Europe, which I think is the largest, if not, it's one of the largest, if not the largest asset manager in Europe. So asset management, then obviously, like I said, trading. So we run a big OTC trading business that's spot derivatives, lending, electronic trading, a variety of services like that, right? So this is, again, both of these that I would say are the sort of two biggest businesses at Galaxy. This is institutional only, like, right? We don't retail traders can't interact with us directly.
Right.
But we also have a big venture operation, which is part of that asset manager. We have an advisory business. So think like investment banking, right? They advise companies and startups, right? So that could include on raising capital or transactions, acquisitions, mergers, even going public. And then, of course, we have a pretty big Bitcoin mining team. So and business. So both proprietary mining, hosting, a variety of other things, financing for miners. So it's a multi
Yeah.
services company. And I mean, obviously Mike Novogratz is our founder and CEO. He's been in the market for a long time and provides a really long history of knowing how crypto works. And he himself is a longtime, trader and macro trader, well-known macro trader. So it's in general, it's an exciting thing. Just briefly on the research side, so we have all these businesses. So there's internal needs for insights and research into the markets, the competition, the opportunities, the new technologies. We provide plenty of that internally. We also obviously publish publicly. You can read all of that at galaxy.com/research. We also publish privately to counterparties and clients, right? Notes, alerts, ideas. I've actually recently, I didn't do it today on Wednesday, but the last several Wednesdays, I've actually tweeted the private notes that we've sent, sort of like open source them and tweeted them publicly. So we write and produce insights for internal and external clients is sort of the way of saying it, but it's reports, it's podcasts, it's alerts and white papers and stuff like that. So,
Wow. I mean, you're running the full gambit here as far as all services that are needed in crypto from an investment standpoint. That's a lot of business services and
yeah,
arms that you have.
yeah.
Um, Question for you. From the OTC side, with these Bitcoin ETFs getting approved, have you seen a surge in demand for Bitcoin? Maybe some of the issuers looking to grab up as much Bitcoin from you guys?
Yeah, so we do provide liquidity for like market participants across the gamut, including market access vehicles, but also hedge funds, traditional or crypto focused, high net worth individuals, other types of institutional traders. So and I would say like on the ETF side in general, there is huge demand for Bitcoin. It's very visible in many ways. You don't have to rely on me telling you about our desk flows. You can see it in the Bloomberg's, data. It's like very obvious, like something like over $1 billion net inflow yesterday on I guess March 12th, which is the largest day ever in Bitcoin ETF history, almost double the prior largest day, which is crazy. I would say broadly in terms of flows that we see on our desk, there absolutely has been a heightened interest, but it's not just in the last couple of months. Like a lot of the rally that we saw from, say, early October to present was also driven by smart traders and institutional traders becoming long Bitcoin and coming back into the cold. Like last year, I said at one point I was on Bloomberg TV and they said like, I think we were getting to 25K. It's like maybe like right around the Silicon Valley Bank collapse or right before that, which was a nice rally off of the 16.5 Bitcoin price to start last year. I mean, 25K from 16.5 is it's like almost a 50% increase. So it is a 50% increase basically. So, and I said at that point, they asked me the same question, like, what's the level of institutional interest? And I'm like, well, we're seeing, some of the early, diehards that are institutional were coming back. But, some are starting, they've already been back, but the most we're seeing is some are starting to pick up the phone, right? They're starting to be like, wait, it's like up 50%. Like maybe I should like check in with Galaxy, after they went dark for like a year. And I said at the time at 30K, they're going to be, knocking on the door, and at 35K, they're going to be banging the door down. Like that's exactly what ended up happening last fall. Like once we crossed like 30K, it started to be like, wait a second, like, wait, we really should be, do we still have the trading agreement live with Galaxy? Like questions like that, right? And we're like, yeah, you do. You should be buying Bitcoin right now. Like, by the way, we've been saying that for a year. So like, we're trying to help you. I mean, we don't give financial advice, but it's, I write content that's like at 16.5. This could be like a generational buying opportunity is what I'm telling the public even. So, and it's really just remained consistent and accelerated, I would say, pretty much since October. And yeah, so we see plenty of interest. I mean, this is not, some people missed it still, which is just crazy to me because I don't know. They're like, well, you should have said to buy. I'm like, do you follow any people that work in Bitcoin? Like, first of all, maybe that's the problem. We tell you to buy all the time. Michael Saylor says he'll be forever buying the top. Like, so maybe it's not like Signal then if he's always buying. But yeah, we are seeing strong interest. The ETFs are seeing strong interest, like the flows. I mean, frankly, the whole market's infrastructure and structure is going to evolve. Like this ETF complex in the US is smashing against the traditional architecture, and it's going to change both. You're going to see increasing volumes on US exchanges and from increasing share of Bitcoin trading volume on US exchanges and in US OTC versus say like Binance, which had been the leader for so long. Right. You're already seeing like CME futures are like the dominant, the biggest venue now for Bitcoin futures trading. And you're going to see probably, I mean, these ETFs suck up like maybe like 20% of the Bitcoin over time. I mean, I don't think like all of it, but like they're going to be massive parts of Bitcoin. And we're just at the beginning of that. So there's, I think, more change to come.
Yeah, to your point, we're just at the beginning, and we know there's a campaign right now to educate the RIAs, the wealth managers, get all these folks familiar. How does this work? What is Bitcoin? Because in the past they couldn't touch it even if they were interested in it. So do you expect like the flows to ramp up into the end of the year or maybe to the peak of this cycle? Maybe then it slows down a bit?
Yeah, I don't know. Yes, I think the simple answer is yes, but I think it is true that we've argued we had a paper in October where we made predictions about like the amount of inflows, which by the way, we only looked at the wealth management and financial advisor market in the US, which is a $48 trillion AUM market. So it's huge. And we said 14.5 billion net inflows from that cohort in year one. Well, I mean, we're basically at that without that cohort having even really turned on yet. Yes. So our prediction, of course, will come in low. We said it was conservative, and we didn't even bother accounting for retail, like for non-advisor money, which we think basically all of this is because really none of the major platforms have turned on yet. You've seen some independent RIAs that have said they're allowing it. Well, that's pretty easy if you're small. The real prize is the 40 trillion that's managed by advisors who are affiliated with banks or broker dealers, right? The big, the Morgan Stanleys and Merrill Lynch's and et cetera, right? That's the huge amount of capital that hasn't really had any way to even put any allocation into Bitcoin exposure, period. They didn't have the cash settled futures ETFs. They did not have access to the closed end trusts. A couple of them had access to like private Bitcoin vehicles, like the Galaxy Bitcoin Fund, right? Which is like, but again, that just a few of the platforms, and usually that was quite limited to like, okay, only if like your super high net worth client like complains enough, then we'll allow it type of stuff usually. So that's the net new addressable market, and as far as I know, they are not really on yet. Some of them are getting ready to turn it on their brokerage platform, but that's just because they're seeing, I think, well, it's inevitable, but that's also because they're seeing like what Fidelity is doing. Keep in mind, Fidelity is like one of the biggest brokerage platform provider. Like you can go open a stock trading account. Forget whether you're, an advisor. They also have a big that. They have a huge asset manager. Among the other things, they issue their Bitcoin ETF. They also have this giant distribution platform, which is the 401ks, the IRAs, the brokerage accounts. So like I think you're going to see the platforms turn on, and then when the advisors are authorized, let alone able to pitch Bitcoin exposure to their end clients, that's the big prize. I don't think we've seen any of them turn on yet, really. I think so. You're going to see a constant drip of headlines over the next 3 to 18 months of these turning on or not turning on. And those headlines will be bullish, and then actually the thing will be bullish because the headline isn't just a news event; it's a flows event. So and yeah, so I think I'm not prepared to say the flows will accelerate. They should continue. I mean, I frankly like they've been accelerating even without these guys. So I honestly, I think the ETFs have been a smash hit, like much more activity than we expected. And the main, like I said, to sum it up, the main cohort we think is the net new user of this ETF is not even in the game yet.
Yeah, absolutely. Now, I'm curious what type of clients you work with. I know there's family offices, hedge funds, pensions. I don't know if you can name drop, but if not, you could give us the category that they fall in.
Yeah, I mean it's all of the ones that you said. It's pensions, pension funds, endowments, big pools of capital, basically that have the capability. First of all, that have the capability of dealing directly, right? You still have to sign like legal documents. This is one thing that one point about the ETFs is like, well, the biggest investor, like an endowment, they can go and sign a private placement agreement and get some exposure into a private Bitcoin fund. Like they have the bandwidth and the lawyers to do that, right? And the smallest retail person, we can open an account on Coinbase or Cash App or something, right? Like we can also do it. It's the middle where it's like, wait a sec, I have 100 end clients. None of these platforms offer sub accounts. I can't go and negotiate a PPA for every client with every Bitcoin, right? Like that's why that middle cohort of the advisor managed accounts really hasn't had access. But yes, I would say, whales, high net worth, family offices, hedge funds. I mean, like there's hundreds of crypto hedge funds, liquid crypto funds, but also the traditional Wall Street macro funds and trade. They all trade. I mean, not all, but like basically they all trade Bitcoin. They either have exposure or they put it on or take it off or they trade it. And this is why when we say or when Novo goes on TV and says that Bitcoin is becoming or has become a macro asset, like that's what he's talking about. The world's largest macro traders, they don't just have like rates, FX, gold, oil. They also have now Bitcoin sitting there on their screen every day. So
Yeah.
and by the way, as they should, because this is like gold, except you can actually use it. It's actually global, right? So, I mean, there's no value in my mind in trading gold. Like if two sovereigns want to trade gold and there's just some guy with a rickety cart underneath the New York Fed, like moving one gold bar from one cage to another, because that's like where a lot of it is, right? Like this is a liquid, global, scarce, decentralized store of value that people are finally understanding how it works. And so that's some idea of the cohorts, but again, no direct typically on the trading or asset management side interaction with. I would say also like crypto market participants, right? We have businesses that do stuff with protocols and whatever they're called, foundations, DAOs, theoretically, right? Miners, right? Our mining business, we may host for other miners, we may lend to miners, right, and do miner financing. So a wide variety, but not like Alex Thorn, right? Not like random, not Tony Edward, not just like normal individual people typically.
Right. Alex, I'm going to ask you a question that you probably can't answer this. We know the likes of Jamie Dimon is constantly bashing Bitcoin, but can you say yes or no if you know of JPMorgan and those guys are trading Bitcoin.
Well, I know that JPM is an authorized participant in at least, I think, some of the ETFs. So they are basically helping create redeem shares. I don't know off the top of my head, but there are definitely, my guess is there are places inside JP that are trading maybe futures on CME, right? Like, so I would say in general, like basically every prime brokerage is doing something in this space. Like, I mean, they have a big trading business, so I'd be shocked if they weren't trading the ETFs, trading the futures. I mean, that's not, doesn't require Bitcoin wallets or anything like that to do that. So I think they probably are.
Mm. Now, as far as assets that you guys support, obviously Bitcoin, do you include like the top 10 to 20 altcoins as well? And your clients have access to trade those as well? Hi, everyone. Pardon the interruption. I'm Tony Edward, the founder and host of the Thinking Crypto podcast. I have a huge favor to ask you. If you haven't subscribed as yet on YouTube or the podcast platforms, hit that subscribe button, hit the thumbs up button, hit the notification bell on the YouTube platform, and on Spotify or Apple or wherever you get your podcasts, please leave a 5-star rating and review. It supports the podcast. It allows me to bring great quality content to you. Thank you for your support, and I'll let you get back to the content.
So with our counterparties, and I make that distinction because on our trading business, this is over at the counter trading, right? It's not a fiduciary relationship for the most part. I think maybe at all. So these are, you meet us out in the world and you say, hey, are you guys selling Bitcoin or buying Bitcoin? And we're like, yeah, we're selling it for this much and we're buying it for this much. Feel free to take it or leave it, right? Like that's sort of how OTC trading works. I don't have the list in front of me, but it's most of the top coins. I think in general, it matters via jurisdiction, right? We have like probably all places, we have a pretty robust compliance review process to determine if something can or can't be listed, right? And includes both, regulatory and safety questions, right? Like we're not going to list a network that can't operate something, right? Or has the risk are too high, but there are also regulatory questions, right? So yeah, but I would say, I mean, most of the top coins, I think, when I look behind you, pretty much all the ones that you have pillows for there. I'm not sure about XRP. I don't know whether we still trade it. Obviously at one point, the lawsuit made that with the SEC, raised some questions there. And like I said, I don't have the list in front of me, but basically all of the top coins that you can, mostly think of.
So on the venture side, you guys have probably invested in quite a few companies. Any that stand out to you, or what you're looking at this year?
Yeah, so I'm not on the venture team, but I am on the investment committee, and I did do crypto VC at Fidelity for several years. So I mean, I'm a big fan. In some ways, outside of research, venture is my actual skill set in crypto, because it's the only other job I've actually worked in crypto, technically, right? So yeah, I mean, I would say, look, they're interested in a lot of things. I think some of the theses that I've seen that we've announced that have been invested in. One, we just did a deal with Chainway Labs, which is the builders of Citria, which is a new ZK roll. I think it will be the first ZK roll up on Bitcoin. So, I think Bitcoin composability and extensibility is interesting there. I think in general, payments, stable coins, new next generation blockchain technologies, equity businesses in a variety of places. I mean, Galaxy's got a giant portfolio of, I mean, they've been investing well before I came in crypto and doing venture. So a ton of stuff. But I don't want to say too much more because I don't know exactly what they're comfortable saying. But I mean, literally, I think if you go to like Crunchbase or whatever the public data, you'll see like hundreds of investments. So like a lot, historically, a lot over time. I think, in general, what I would say in terms of like this year, themes that are very interesting, like I mentioned, Bitcoin L2s, absolutely. I would say modularity, restaking in the Ethereum world, both very interesting, and in other, protocol worlds, high speed, parallelized blockchains, new next generation blockchains, I think could be very interesting, which is basically Solana technology, right? The parallelization of execution. That stuff's interesting. I think Solana is, from a usage standpoint, like very pretty much undeniably the third chain now, Bitcoin, ETH, and Solana. Literally not in terms of what should happen, just literally in the amount of transaction volume, the amount of trading volume, the amount of TVL. Like if you look, it's basically third on all of those. So that's interesting. I think this rally has, I've been describing it as like a barbell rally. It's basically like the L1 majors with obviously some exceptions. Every statement has plenty of exceptions,
Yeah.
but it feels like a Bitcoin driven rally. I mean, it's Bitcoin's the only one of the majors that's retaken and exceeded its all-time high, prior all-time high still. And then sort of like a meme coin rally. And to me, that tells me that like, yes, like mass market retail likes memes, but the fact that Doge is so underperforming shows that they're not really here yet in my mind. I
Right.
feel like it's the jaded crypto native retail that like we hung on for so long in that bear market. Like, and they're not excited right now about things like DeFi, Web3, metaverse. Like no one's really excited about that inside the crypto native world. I mean, I don't mean no one, and I think these things still have prospects, but like, you know, the crypto natives that stuck around were like ready to go way out on the risk tail, right? And that's why you have like this cascade of derivative meme coins that have been rallying. Meanwhile, basically, it's still a Bitcoin driven market. I mean, that this Bitcoin's still more than 50% dominance by that metric. And so anyway, I think that there'll be some there'll be catch up. I mean, DeFi is obviously very important in crypto still. It's just that no one's like, oh my God, like not no one. There's some exceptions to this, of course, but we're not like all getting hyped up about the next lending protocol. It's not like DeFi summer, you
Exactly.
know?
Yeah,
Yeah.
no, absolutely. You're right. And then, you're mentioning Solana. There's been a lot of meme coins building off of Solana. So,
Right. A
yeah,
ton.
yeah.
A ton. Yeah.
Um, let's talk about your Bitcoin mining operations. I'm very curious about that because we've seen the rise of Bitcoin mining in the US, even though we had some FUD from the EIA, Elizabeth Warren, and likes of her camp. Um, where are your mining operations? And you mentioned you're also hosting for other companies as well. Tell us a bit about that.
Yeah. Yeah, so we have large mining operations in Texas, in ERCOT, which is the Energy Reliability Council of Texas. I even remember that. Shout out to my friends Brian and Austin who run that business for. If they're watching, like I got that right, the acronym. So large facility there in Dickens County, which we're a big supporter of the folks there. It's a giant area of wind and solar production. To be clear, Texas is. I think I read once that if it were a country, it'd be the largest wind creator in the world, right? So like,
Wow.
it has this outdated reputation sometimes of being like oil country. It absolutely
Yeah.
there is oil and fossil energy there, but it is, I think it's a massive renewable energy generation state. So we have a big proprietary mining operation there. We also host there, and yeah, I mean, we have some of the best mining people and talent here in the space, and continue to. We're a public company traded in Canada, right? And you can see our financials, and so I'm not really supposed to talk about this type of stuff specifically, but go and look. We have plenty of information about our mining business's success, but I would say in general, look, we believe mining can be a great business, can be run well. We love the optionality and sort of like market dynamics in Texas that allow for dynamic pricing and hedging that make us like I think both a profitable and positive part of the Texas energy grid. And so, yeah, I mean, mining is just an interesting and tough business overall, I would say, because like, and think about it, like, imagine you tell someone every 4 years that gold's going to have in value, like that you pull out of the ground, like it. So it's a fun, difficult business, but with a lot of room for optimizing with your intellect. And we have some of the smartest people building and operating that business. So we think it's an important thing going forward.
For sure. Let's talk about Bitcoin's price movement. It seems to be ahead of schedule. Usually, the type of price appreciation we're seeing happens post-halving, but I think the ETFs, as we were talking about earlier, is driving a lot of demand. What are your thoughts, and do you think we see it a blow off top this year?
This was a big question people were really worried about like 2 weeks ago. I mean, I think people are still worried about it, but I mean, I was started to hear this question about 2 weeks ago. I wrote about this, and I had pointed out to your point, Tony, that at the time it was 50 days before the halving. Now we're about 40 days before the halving. So I'm going to use that outdated numbers, but 50 days before the prior two halvings, Bitcoin was still between 60 and 70% below its prior all-time high.
Yeah.
50 days before the halving this time, we were 12% below the all-time high. And of course, 40 days before it, we're over the all-time high, right? So that's new. I agree that that's new. And that has led some people to worry that we're like speed running the cycle, that like, well, wait a sec, does that mean, are we going to top too early, right? And you even, in the construction of your question, said like, are we ahead of schedule, right? So I'm here to say that basically none of that matters, and this time is different. And the reason it's different is because of the ETFs. I mean, I doubt we'd be where we are in the supposed cycle if the ETFs hadn't come out when they did. It's driving. There's a giant amount of money that likes Bitcoin that was never able to really figure out how to do it. You've told your parents and grandparents all you got to do is download this app and blah blah.
Yeah.
Well, there's still like 3 or 4 steps of complicated. They got to take a picture of their driver's license. Like, I know tons of people who are like, yeah, I tried to and I didn't get through the onboarding. And I know it's not that hard to us, but like, it's hard to a lot of people. And certainly on the advisor side, they can't set up a Coinbase account for every one of their clients, nor would they want to, because if it's not inside their advisor managed accounts, they don't make any money off it, right? So there is a giant pile of money that is looking to get involved. I also think the macro situation, it's really becoming quite serious on the government debt and fiscal situation in the United States and globally in a way that was just simply not the case even 5 years ago. And what I mean, the trajectory was bad then, and it's obviously only gotten worse now. But there is pervasive fear in the investment community about the state of the American fiscal situation. I mean, truly, like it's no longer a low murmur for gold bugs to complain about the national debt. You have literally the world's most famous investors all basically freaking out about it, right? You've Jamie Dimon is, shout out Jamie, our friend. He said it. It's unsustainable. Stan Druckenmiller, Paul Tudor Jones, these guys have all been talking about this. It's even Chairman Powell on CNN finally admitted directly that it is absolutely unsustainable and a problem. Like, I'm now obviously the Fed, it's a fiscal question. It's not a monetary question. In some cases, it's the tail wagging the dog, with the Fed having to try to deal with and absorb the issuance that's coming. But the U.S. is adding $1 trillion to the national debt currently about every 100 days. And in that environment, you're looking for hard assets, and particularly ones that you could use that aren't controlled by a state. Even real estate is certainly good. We have very strong property ownership protections and law in the United States, which is important, by the way, as a core foundation of a free market to have value. It's one of the reasons the capital markets are so valuable in the U.S. is because of our rule of law. Mm-hmm. But you can envision, and certainly in a less advanced country, but you could envision when, like, for example, I just read a story today that the top compliance investigator for Binance went to a meeting in Nigeria about this and was detained. Basically being held ransom by the Nigerian government. They want $10 billion from Binance. Well, they're seeing greater than 30% monthly inflation right now in Nigeria. So you can imagine if the US or any country experiences that level of economic, fiscal, monetary struggle, the rule of law can break down. Yes. So you really want things that you can possess yourself, the hardest assets. A deed to a house, yeah, I mean, it's pretty good, but what's better is cryptographic keys to a global digital asset, in my opinion. So that is also going to be helping Bitcoin, I think, and whether that's good or bad. I mean, I don't the uncertainty, the geopolitical fragmentation, the macro situation, the government debt situation is all, I think, very supportive for Bitcoin. So broadly, is there, I was sort of joking with you at the beginning of this question that is there a schedule? Sure. Historically, we've seen that the halving is this part, but even that, was that causation or merely correlation? I've seen other people who have argued that just global liquidity lines up better with the Bitcoin cycles. This time is different. I acknowledge that. But I also think this time is different. I think we've got a giant new set of market access vehicles. We've got a very different macro situation, and we have just again, a growing base, like the number of people that are interested in Bitcoin and digital assets, crypto in general, it's significantly larger than it's and it's going to get larger. So I don't, I'm definitely not saying super cycle. There probably is a top, like there probably is a cycle. I mean, I don't want to deny history. They probably see it the same thing, but again, this one also already looks a little bit different in other ways as well as prior ones. So I think it's too early to say. I really don't think that, 5%, 10% above the prior all-time high is the top, though. I really don't think we're close to it personally.
For sure. And, to your point, I think a lot of people are becoming more aware of the macro issues while historically they haven't really paid attention. But maybe the internet, the flow of information is helping social media. Like you said, even Jerome Powell talking about the debt situation. So question about that, is Bitcoin a possible solution? I'm not saying it's the only solution to that global debt situation, the fiat currency problem. We see central banks are hoarding gold. So what if eventually they start to hold Bitcoin also as a reserve asset? And I don't know what the reset looks like for fiat currencies, but any thoughts on that?
Yeah, it's definitely not the only thing, right? I mean, again, precious metals. I mean, from an investment grade standpoint, gold is still a huge deal, certainly at the sovereign and central bank level. Yeah, I mean, so I think we will. I honestly, I would bet we will see more sovereigns, so nation states or sovereign wealth funds. We don't have a central bank, as far as I'm aware of any type yet that holds Bitcoin, but it wouldn't surprise me. Frankly, I would suggest that, like anyone, the right allocation of Bitcoin can be enhancing to your portfolio from a risk adjusted basis and blah, 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 like at certain levels, and again, even at small levels, it can have a positive impact. So I think that's true. Basically, the math that I've seen and that we've published on our website and done and research we've written shows that that's provably true. Right. So to me, like in a world of uncertainty and growing uncertainty, again, you want harder assets. And so I think you will see it.
Yeah, and something that happened recently, the state of Arizona is looking to pass a bill that will allow them to add the Bitcoin ETFs, I believe, to their pension or treasury, one of those. So it's interesting that states here in the United States are looking to do that, and I think one of them does it. There's going to be a bunch that follows. So
Oh
it's
yeah.
I'm very fascinated to see how that plays out.
Yeah, I think there are already states, to be clear, whose government employee pensions or whichever, it depends. Different states do this differently, by the way. In some cases, like you're telling me that Arizona may pass a law allowing them to do. I believe in many states nothing like that is required. They outsource the management of their pension to a financial advisor. So they may. I believe there are already several large like pensions comprised of government employees or state employees that already have exposure to crypto in general, like whether through Bitcoin directly or venture, by the way, huge. I mean, almost all of them. There are plenty of big investors in, the big crypto VCs as well. So, but yeah, you will see it. Like again, like that's not. Not only is it not far away, it's already happening.
For sure. Now, there's talks of an Ethereum spot ETF coming this year. There's a May 23rd deadline. Some people are saying it may not happen then, but it will eventually happen. And if the SEC decides they don't want to approve it, folks are going to take them to the court and win like they did in the Bitcoin situation. What are your thoughts on the approval of the Ethereum ETF?
It would be a big deal for Ethereum. I personally don't think you'll see as much interest from traditional finance and allocators as you are in Bitcoin. And it's just a more complicated, different thing. It's not as easy a story. There are other things like, I mean, I'm not to throw shade specifically on Ethereum, but like they've changed their monetary policy like 9 times. Like some of the pitch doesn't make as much sense. And by the way, it hasn't been practiced. I mean, the Bitcoin world, and I mean, even in the financial world who likes Bitcoin has been successfully explaining and running the numbers and pitching Bitcoin for like over a decade, right? Like, so it's like we know what the story is. We know why people should allocate. Ethereum is just a much more complicated and different type of system, but it would definitely be a big deal for Ethereum. I'm in the camp. I mean, I've called it publicly a toss up whether something happens in May. I don't really, meaning like, I happen to think it's less likely than it's less likely than not, or less than 50%, we'll just say it that way, chance that it's approved in May. The reason for May is similar to the January 11th, like ARC final approved deny date for the Bitcoin ETF. There's, I forget which one it is, but some of the several filers have their final 19B4 approved deny date in May. And so they can either withdraw or they can be accepted or rejected, right? And there's a bunch of, we could hash out the arguments for and against. I think long term, absolutely, like they will be approved. The main reason is because the SEC already approved the cash settled futures ETFs. So like that's basically the pathway that's been set by the Bitcoin ETFs, right? You get CME futures. Maybe you get Canadian ETFs. Bitcoin and ETH have both, right? And typically Canada was part of this. Not like it's directly relevant, but it was in this order. Then you get the futures based ETF, and then you get the spot ETF. Like that's what Bitcoin did, and ETH has 3 of the 4. So like it seems like if you're going to deny the ETH ETFs for something other than the same reasons why they had been denying the Bitcoin ones, which was primarily about surveillance sharing agreements and a regulated market of sufficient size stuff. And those questions are what was basically directly rejected by the DC Circuit Court of Appeals in the Grayscale case last August, in August 23. So and effectively forced the hand of the SEC, right? There were no other arguments they basically ever made for why they shouldn't approve the Bitcoin ETF. So when those 2 arguments were overturned, there were no other good arguments. I mean, Bitcoin and Ethereum are significantly different enough, in my view, that like you could bring up other arguments, but the problem is if you're the SEC looking to deny, in my opinion, you've already approved the cash settled futures. So like if you wanted to bring up other arguments other than the correlation between spot and futures prices, the availability of surveillance sharing agreements and blah, 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 you should have done it when you heard the futures ETFs, not now that you've allowed them. So this is the common argument in favor of why people think that they could be approved in May. I just don't know. That's why I'm calling it a toss-up. I think obviously inevitably they get approved at some point. It's just a matter of if they get rejected, who sues? Does Grayscale sue again? I don't know. I genuinely don't know. So I mean, if they have to be, if the SEC has to, isn't going to act absent a direct ruling from a court, then I don't know when it would happen. But eventually they'd probably win that case. You would cite the DC Circuit Court of Appeals decision in Grayscale as the comp here, right? In your court case.
Yeah, absolutely. So on that note, we are facing a lot of regulatory hurdles. There's a lot of uncertainty. The SEC, I mean, it's a mess. They're losing in court. They're suing people. People are suing them. But Congress has a couple bills in the House. There's 2 in the Senate. I don't know what you guys are hearing. I don't know what Mike is hearing, but are you optimistic that we might see some sort of regulation this year or maybe next year?
Oh yeah, I mean, on a long enough time frame. I mean, next year, big difference between this year and next year, I would say. I mean, we're in an election cycle this year at the federal, at the presidential, obviously. That makes it a little trickier. I would say, I think of the major issues that I've seen before Congress on this is, stable coins, legalizing them, regulating them, whatever. I mean, they're already legal, but formalizing the rules around them, creating a regulatory framework to issue and use them, and blah blah blah. And obviously, we've had work on that done. I think great work in the House Financial Services Committee with current chair Pat McHenry and ranking member Maxine Waters. And even when Maxine Waters was chair and Pat McHenry was ranking member, they also did good work. So there's some bipartisan desire to do that, to do something. I'm hearing that there may be new movement happening on it as well. So I would say most likely of any of the things that are sort of big, stable coins could still happen this year. I'm not holding my breath for a market structure bill, which, the idea here is like, well, maybe we could sort out some of the conflicts that have arisen between the SEC and the industry about like, well, what is a security? What's a commodity? Who regulates what when? Like that. There's a couple proposals, the FIT Act, the Lummis-Gillibrand bill in the Senate. There was the Stabenow-Boozman proposal. Like there's several of these bipartisan. I'd be very surprised if there's really any real traction on that this year. There's also not a lot of time. I know it's crazy, but like you've got the government, you've got must pass spending stuff where the government could shut down again, right? This is the new normal in America. Congress hasn't passed a budget on time since 1996. So like they're basically struggling to keep their head above water, just doing their basic job. So like big sweeping bipartisan stuff. I mean, we haven't amended the tax code in 30 years, right? So like, in general, hard to get this stuff done. I would say the other thing that obviously has been top of mind is illicit finance related questions.
Right.
Senator Warren's proposed bill, the Digital Asset Anti-Money Laundering Act, is was raising a lot of eyebrows and getting a lot of interest, partly because of the renewed interest following the Hamas's attacks on Israel on 10/7, but even then it was initially introduced right after FTX and got some in fall 2022. I've been very vocal. I won't rehash the whole thing. I think it's a terrible bill. I think it doesn't do what she claims it does, and what it does do basically criminalizes running software in America. So I think it doesn't even accomplish what she says it should accomplish. It would create an unenforceable prohibition on basic freedoms that Americans have. It's a crazy concept. There are other ways to help stymie the use of crypto assets for illicit finance. That and by the way, she constantly says that shouldn't crypto firms have to follow the same rules as banks? Well, first of all, that's a loaded term because banks actually have a whole different set of rules that many financial companies don't have to follow. But by the way, what she means is like on AML and KYC laws, they do. Crypto firms do. Her bill doesn't put it on crypto firms. It tries to apply the Bank Secrecy Act to nodes, miners, software developers. It's crazy. There's no precedent for that at all. So there is a potential always, and I've been warning about this, for something in that world or in that sort of issue to bubble up in Congress. Those are the three sort of main, right? Stables, market structure, illicit finance that I'm really seeing. I should say there have been plenty of other good bills that have been introduced in the House and Senate that are maybe more narrow. There's the Proof Act from Senators Tillis and Hickenlooper in the Senate Banking Committee that mandates proof of reserves on cryptographic, crypto style proof of reserves on exchanges and custodians in the U.S. I think that's just undeniably positive for consumers, and it's also great. It's a technology that you can only do with crypto assets, right? It's actually an area where crypto assets are significantly better than traditional assets, right? You can't mathematically prove the stock is in your account, but you can mathematically prove the crypto is in your account. So, and others, a variety in the House as well. There's issues with like SAB 121, which is the stupid staff accounting bulletin out of the SEC that blah blah blah. Long story short, it makes it impossible for publicly traded banks to touch crypto. Mike Flood and Richie Torres in the House have introduced a bill under the Congressional Review Act to block it, or I don't know the terminology, overturn it. I mean, there's plenty of interesting and bipartisan works, but I would look out for illicit finance and stable coins as being possible this year. Market structure, most likely not.
Yeah, it's tough. Like you said, government has to get out of its own way with a whole bunch of other things, but hopefully they can come together and get this through it within the next 2 years. What are your thoughts on NFTs and tokenization, and is Galaxy looking to do anything on that front?
I've been looking at this myself for years. Tokenization, I mentioned sort of at the top of the discussion a little bit about how we looked in all this private blockchain, enterprise blockchain related stuff. A lot of that was sort of like tokenization questions. I happen to believe that public blockchains and distributed ledgers are a far superior technology for tracking the ownership and transfer of assets of all types. So like I personally, I think if you developed a financial system from scratch, you would absolutely have a lot of these tokenized assets. You'd probably obviate the need for the Depository Trust and Clearing Corporation, the DTCC. By the way, they wrote a paper in 2015 or 16 that said they should be disintermediated by blockchain. They were very forward looking about that, and they're totally right. There's a variety of reasons why we haven't seen it at scale outside of the stablecoin use case, which is, I think, a tokenization like proof of concept that is absolutely positive. Stablecoins, that is tokenization. It's working, right? People love stablecoins all over the world. I think you'll see more. I think we're very interested in it. We have some efforts, mostly not publicly disclosed, that we're interested in. Research and development side. I think you are seeing the increasing tokenization of things like private credit and treasuries on chain, right? From issuers like I think, like Franklin Templeton and maybe others, like what we call RWA. I hate to say that because
Yeah.
actually I'm fine with it, but my colleagues that come from the real traditional finance world, even though I come from Fidelity, I'm not like from, right? I told you I did legal and compliance primarily before I did cryptos. I'm not like a finance guy in that sense, but my colleagues tell me that's actually the acronym for risk-weighted assets, and they get annoyed when crypto people misuse acronyms. But in any case, RWAs have been a very interesting theme in the last year, and I think will continue to be. So maybe that's the pathway we finally start to see tokenization as sort of a broad thing. NFT is like, I mean, I think I'm personally interested in scarce artwork generally that is pleasing to me. I'm not a huge believer or just don't have, I'm ambivalent, don't have many cares for buying PFPs and things like that. I would say we do follow it very closely. Galaxy owns a number of NFTs that we've talked about. I mean, on our we got punks and other stuff that Galaxy owns on its balance sheet. So I mean, we like NFTs, I would say broadly. I think it's kind of interesting. You see the NFT market really sort of lagging here while the meme coin market, which is kind of similar, right? It's
Very
kind
similar.
of like, yeah, maybe you don't get like an individualized JPEG to display your community affiliation, but it is sort of a community building vibe. A lot of these meme coins, like you're part of the community. You can do token gated access. You don't need an NFT. You can do a fungible token and do token gated access with. So you're seeing something similar. I think we obviously follow it from a research standpoint. Volumes are still down huge. Probably the most interesting thing in NFTs today is Bitcoin ordinals, which are dominating trade volumes at most of the. I mean, I just looked recently, something like 80% of the Magic Eden volume is Bitcoin related. So I don't know how sustainable that is. I mean, we've covered inscriptions and ordinals earlier and at better length and deeper than anyone that I know. We have multiple deep, long reports about it. We're in a unique position to cover it because we know Bitcoin really well. We know NFTs well. We have a Bitcoin mining business that we can get the miner's perspective involved in. But to me, that's probably the most interesting story at the moment in NFT world. So, I mean, I think it drives activity. I mean, I'd be crazy if I said that the PFPs will go away. I think whether we rebound to like, I mean, that was the really forefront narrative in the 2021 bull market. We may never get back there, or maybe it's crazy for me to even say that, and we eventually exceeded its scale. I really don't know, but I think artwork on the blockchain it's going to be here to stay. Probably.
Yeah, and I'm excited to see NFT utility. To your point, I'm not so much into the collectibles aspect, but if I can get an NFT that gives me special perks, benefits, access, and I know there's dynamic NFTs being worked on for different industries with cars, real estate, and so forth. So I'm excited to see that aspect of it.
Yeah, I mean, I think you could have, I mean, from a tokenization standpoint, that's right. I mean, you can tokenize non-fungible assets like real estate and identity. I mean, I think I'm basically in favor of all of this. There's just a variety. In some cases, you don't really need the blockchain for that. Really, what we're talking about in whatever industry, it's that they need better digitization. In other issues, there's a slew of intermediaries that would be harmed if we would disintermediate them. So while it's possible, it's got to be the UX for us has to be 10x better so that we can like convince the people to cut them out or whatever, or they stand in the way, or there's regulation. Like I think, like I said, if I designed it from scratch, I think we'd use this technology a lot more than we do today. But it's going to be slow going for a variety of reasons.
For sure. Alex, I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
Oh man, you'd have the Las Vegas sphere with Michael Saylor's face on it, saying there is no second best. There is no second best, right? I don't know. You'd have there'd be a lot of hip hop music. You'd have DJs everywhere. We'd have some break beats going on. Some people doing some break dancing on cardboard in the streets, and it would be sunny and 67 degrees every day. And we would be walking constantly to a baseball game, like eating a hot dog, listening to DJ Screw or like 3 6 Mafia or Nas or Tupac.
Nice.
Hip hop, the Sailor as the sun god themed metaverse. That's my idea.
Rapid fire questions. Favorite food?
Oh man, pad thai, spicy pad thai, steak, ribeye steak.
Oh, ribeye steak for sure. Musician, favorite musician or band?
Oh man, I'm just gonna say currently Eminem, Logic, Joyner Lucas, all Kendrick Lamar, all the real lyricist hip hop artists. By the way, shout out to Captain Youth and 88 and 8, my two favorite like Bitcoin themed rappers.
Nice. Favorite movie?
Oh man, Tropic Thunder.
Favorite book?
Oh man, goodness gracious. Love the Red Rising series. That's recent though. I just read it. I mean, favorite book, Lord. There's a lot. Hunter Thompson, if I have to pick one, Hunter S. Thompson, the doctor, the gonzo journalist himself, any of them, Fear and Loathing on the Campaign Trail, any of those books, Fear and Loathing in America, Fear and Loathing in Las Vegas. I guess anything Hunter Thompson, Fear and Loathing. It's my favorite.
And when you're not working at Galaxy, what are you doing for fun?
Hang out with my kids, making hip hop music, and reading.
Nice. Alex, pleasure chatting with you. And I definitely have to have you back on because you guys at Galaxy are doing so much. You got your pulse on the market. But thank you so much for joining me.
Yeah, Tony, thank you for having me.